Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Welcome. Appreciate you all stopping by today. If you find these streams useful and you have trader buddies who you think might be interested, forward a link over to them. Um, this stream's about integrating Bookmap order flow tools with auction market theory using a volume profiles, a chassis in the intraday developing time frame. It's based on structured trades that I've shared in the Bookmap Discord Trader Lab community. Trader Lab's a group of like-minded traders who come together to leverage their collective experience, and there's no cost to be part of the Trader Lab community, and you don't have to be a Bookmap subscriber or any of that. The idea of Trader Lab is to help traders understand the business of trading, how the market works, why it does what it does, and to actually create business plans and trade plans to navigate an environment that is always changing, always probing for value. And the reason we actually have a market is to try to figure out what's this thing worth. And it applies to all markets because markets are really price discovery mechanisms. What's too high, what's too low, what's fair. And the thing is, since if you're a day trader or even a position trader, doesn't matter, the process is the same. The market is always trying to find out what's fair. But in order to do that, it has to find too high and it has to find too low. And that process takes place in all time frames. So whether you're a swing trader, an option trader, if you're trading ETFs, doesn't matter. Trading futures, pork bellies, doesn't matter. Wherever a market has any kind of volume, we're going to have this behavior. And then you can carve out a niche for yourself or rotational structure that fits your risk reward and gives you a statistical edge. The business of trading is about statistical probabilities, not individual outcomes as far as being right, knowing what's going to happen. We're in a gaming environment, and gaming really means statistical probabilities, a random distribution of outcomes over a large sample size. It's very difficult for us to operate in this environment because it's completely uncertain. We strive and seek certainty to fulfill a psychological need to avoid risk, of course. However, the business actually is not about avoiding risk. It's about understanding risk and distribution of outcomes, and it's called an edge. So if you don't have an edge, you are the gambler. So casinos have built a very successful business on something called edge, and they only play games with edge. Maybe the idea might be to only take trades that you have vetted that has an edge. Do you think that might give you an advantage over most other retail traders who are basically gambling or playing a video game? That is why I created the Trader Lab to help traders understand the business of trading and to potentially, assuming they do the work, and reverse engineer structured trades to create edge. And then after that, it's up to each individual trader to find their groove or the rotations or range they need to trade to make those metrics work. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but if we get into real time, we'll talk. Also, this is based on structured trades that you can learn. The thing about it is, and probably the more frustrating issue for us as developing traders, is that there is no plug and play. So most of us go on the quest to find certainty, and we basically try to replicate what we see. The problem, of course, is everything works randomly. Remember, in the casinos, the cards coming out of the deck are random, and the way gamblers play the cards are random. So the gamblers win. So everything works randomly. All your indicators, if you open your software toolbox, there's 100, 150 indicators in there, whatever. They all work randomly. So does the Magic 8 Ball, and so does a dartboard, and so does just flipping a coin. Isn't that interesting? They all work randomly. But if you don't have a statistical edge, in spite of those winning trades, which we all have, then you're trapped in something I call Trader Groundhog Day. Now, I've shared 60 PDFs of structured trades. I threw these together many years ago. I'm not a vendor. There's no cost for this. I'm just someone who's been doing this a long time. and both professionally and otherwise. So I put together some ideas, and the idea of this is just to give you something to think about, and how you might organize market mechanics. Again, no plug and play. The idea of this is if you find any of this interesting or these streams, that you can isolate some of these behaviors and then reverse engineer them. You must find your groove, your flow state, and develop it, understand it, and anticipate it, not make it up as you go. And I understand we're all subject to impulse, and that's part of the fight and flight, the FOMO thing, that we all are subject to. And the biggest obstacle I have found for traders is not learning how to trade. Most have FOMO, are in such a hurry to push the button and get the dopamine fix, they never do the work. Who wants to do the work when we can push the button and gamble? Well, if you don't do the work, you're gambling, and I would say sustainability is probably not in your future. By the way, we have a new contest at Bookmap, which they just told me about, and I think this is really, really a good one. You can win 3 months of Global Plus with stocks and futures data. And all you got to do, so that's $600 in subscription value. And you can get the branded Bookmap blue jacket. You can actually wear this jacket around, the hoodie, the jacket. You get an invite to the Bookmap Academy. It is the elite circle of top traders, and you can also be invited to it, and you'll stand out with the blue jacket icon on Discord. But guys, let's get back to it. 3 months of Global Plus. Need I say any more? All you have to do is take screenshots of your Bookmap, this kind of thing. Does this look familiar to you? All right. Hashtag free blue jacket, drop it on Instagram, X, and I'm not even sure what that is. Is that LinkedIn now? No. Really? Well, there you go. So share your charts, order flow concepts, executed trades, use clear text overlay to show entries, exits, important levels. And here's some examples. Actually, let me see if I can get this in here. It starts today and it's going through the month. So let's go, guys. What are you waiting for? There you go. Gotta go. We got to move on. Now, let's take a look here. This is the higher time frame RTH candles, if you will. As we might agree, the trend is up. And the only thing we've had happen in here is inventory grabs. So basically, the market goes up to go down, the market goes down to go up. These yellow lines are basically high volume areas, and they act as a retail price. Remember what the market is. It's shopping. If you know how to shop, you know how to trade. What's different is the prices in your store don't change much. If they put it on sale, you throw 4 in the cart. If the price gets too high, you say, I'm not paying that, and we run out of buyers, and then the market comes down, and in our business, takes out the sell stops of the week longs in here. Thanks for playing. You get a coupon to the buffet. And then we find our excess. And now we come back in the other direction. We take out our stops here. We close down here. Or I should say, we test the retail price here. Too low. But what happens here? And I don't remember which one went first. I think it went down first, got the stops under here, inventory grab, and then took the buy stops above here. Now this sets up our trend day. Hasta la vista. Thanks for playing. Now we have Friday and Thursday. Now here's what's interesting about this. We open, come down, take out the week longs. Notice a similar process. It goes down to go up, goes up. This is Friday to go down. Why on a Friday? Weekend, guys. Let's put the Maserati back in the garage. Now, let's look at some levels. Now, when I was looking at this is a balance. So what you get is buyers here and sellers here on Friday. And these guys primarily I thought, and if you watch Friday's stream, we were looking for, what's it called? Responsive selling. And the responders, the sellers, the idea of the sellers was the profit taking. I'm getting out, I'm responding. So that brings us to this. 67, 64, 75 is the highest volume between these 2 days. And you got tails on both sides, okay? So that is excess. So we got too low, we found our buyers. We got too high, we got our sellers eventually. And then this. And this yellow line, 78.50, is the highest volume for this day. So think of it like a retail price. If you put the 2 days together, this is the retail price. So I'm going up in time frame. And if we go even further, and I take all the volume from this outside swing to this current all-time high, 12 is the high volume. So think of this in multiple time frames. And one of the ways to think about this is I always kind of tried to figure out, how do I relate to this thing? And of course, we make it complicated, but actually this is not complicated. Trading is not complicated. It's just like shopping. What is difficult is randomness. That's the part that'll get you, because you've got all these chemicals flowing in your brain. You want certainty. You're looking for confirmation. You know, all the good stuff that we all want, but that's not the business. The business is not what you want. We have to solve for what it is. And that's very different than what you want. I know what I want. I just want that ATM in the basement. I want to put a trade on, and I want dollars to pop out of that thing. That's what I want. I want not to take stops. I want to be certain, and I want confirmation. That's what I want. Well, you're not going to get it here. So now we got to solve for something else. Now what we want, we have to solve the same way the gaming business works. And that is, we're going to pay the gamblers. We're going to take our stops. We're going to have random winners. We're in an environment that we can't predict. So we have no certainty, and we don't have confirmation. What we have is always randomness. So let's look at the first trade today. Now, my first trade was a short today. And when I come in, I have no idea. And you're going to go, well, that's brilliant. And I'm going to say, yeah, it's brilliant because I already know I don't know. This is the ETH high. This is the overnight volume point of control. This is the last auction from the ETH retail price. This is the retail price from Friday. Wish it was Saturday, but it was Friday. So high volume, high volume. So what I'm seeing here is, here's the ETH high. Friday's all-time high. So we didn't get here, so maybe too high. We also have other high volume here, maybe too high. Let me show you where some of this stuff comes from, so you can kind of get a sense of it. 94.75. There was volume up here, which we rejected on Friday. 94.75. This is, think of this like Matryoshka dolls, Russian dolls. Everything is happening inside of each other. So all of this is happening inside of here. Then these last 2 days, what's happening here, and then going up to Friday, what happened there? High volume, that's just Friday. So I'm going into these different time frames. So I know 94.75 might have been too high because I got below it and I closed below it. So if we come back up here, then I can think about it. There's your 94.75. There's my ETH high, all-time high. Well, we didn't get there when we checked this. Is it too high? Well, this now is my retail price from the last auction. ETH high, retail price. Retail price from Friday's auction, and then settlement. And let's go back to the next level down here. Yesterday's low, but where was that 64-ish? The 64 and change. This is the target. So, and I don't know. So I'm just telling you, I have no idea. So I don't know anything. I keep my brain in it's like you're at the starting line and at the Indy 500 or Le Mans and your car's in neutral. I'm in neutral. I come in with a neutral mindset because I was looking at this and I'm thinking, this looks like two-sided trade here. Uh, so now I go to my grid sheet that everybody has on TraderLab, or whatever you have for yourself. It has nothing to do with TraderLab. It has to do with you, right? So what do we do here? We're opening higher outside of value. Value is where 70% of the volume took place on Friday. So higher in range outside of value. So let's see. We're opening in range, but we're not in value. What does it mean? I'm looking at a schematic chart right now, a grid sheet that gives me a situation to think about. The market is slightly out of balance. So what do we anticipate today? Overlapping day. So, and since we're inside of yesterday's range, what do? Basically, we have to look, is the market going to reject this value and move out? And if not, then we can come across the range. Now, we go to our statistics, and you have to vet everything for yourself. All of this, besides having a plan before the market opens on what I will do, because I'm not going to make it up, I'm going to be buffeted by emotions and chemicals. All right, the lunatic I call Hyde, Jekyll and Hyde. Hyde's the fight and flight, fear, FOMO, all that stuff, and it's wiring, primal wiring. Avoid risk, seek certainty. Primal works good when you're dealing with apex predators out on the tundra. But these primal wiring, this behavior is wired into us, and we experience the market, which is uncertain, exactly the same way as if it was a saber-toothed tiger or something else. So our reaction to this is fear, uncertainty, anxiety, all chemicals. Okay? So we have to know that. So we need tools, and we need to understand the environment we're operating in. And it's really important that you don't try to fit this business into your comfort. You will be uncomfortable. It's a constant state of uncertainty. How can you be comfortable in uncertainty? So you get this uncomfortable, and then you're seeking comfort. So that means FOMO. Oh, I'm sure now it's already left the station. Now I'm going to do it, and your risk is off the chart. So we're opening higher above settlement inside of the previous range. Taking out the first hour's high or low has a 98% probability. We are in an uptrend. Taking out, 82% probability to take out the previous high or low. Getting to the overnight volume point of control, 81% probability. Getting to the overnight mid, 75% probability. Getting to the previous point of control, 68% probability. And all these you have to vet. Getting to the first hour's high, about a 66% probability. Taking out the previous high, 58%. There's more, but that'll get you going. And there's a whole sheet of statistics. They're all available, as well as those 60 PDFs I showed you at the top of the stream of structured trades. So now we come into RTH Open. Now, guys, remember, before the market opens, this is what you have. Now you're waiting to see who takes control. Now, for me, I'm as clueless as everybody else. Now, I'm going to show you the opening trade. Now, the opening trades, and I always have to say this, it's not where you start. It's the last place developing traders trade, but it's the first place developing traders do replays and reverse engineer. Because what we're going to try to do on the open, the only way to trade the open, in my opinion, is to have unconscious competence. And you're not going to have that until you spend a lot of time on replays and active narration. And all this is outlined in the TraderLab. Here's what you should do. By the way, we're taking out that first hour's high. And remember, what is the overall trend? It's up. And what we observed, buying. Anytime the market goes down, and not, and we find our buyers. So far, that's been what's going on. Market goes down to go up, and the market goes up to go down. Now, let's look at the first trade. Now, I posted this in Trader Lab. Not at the time. I don't call trades. I mean, look, everybody takes stops. I've taken two today, which I'll show you. It doesn't matter. By the way, taking a stop, is that a disaster? It's not. I know how we feel about it, but that your feelings have nothing to do with this. How you feel is just part of your humanity. It's not the business. Just remember, the casinos, the dealer, if he deals the cards following the game, the plan, and they pay the gamblers, you don't see the dealer walk out behind the shed and step on a rake a few times. He just deals the next hand. That's really the business. This is called VPOC migration. Now, it's the first thing that gives me a sense of valuation. And the reason it tends to work, and I came up with this many years ago, and it was really just because I kept seeing it. I'm going, what's going on? This is not at the time. I don't know what about it now, but back when I learned market profile in 1985 or 86, I think it was, none of this existed, and I never came across it. I came across it, and I got a lot of pushback from the purists. You can read a book, and there's rules. The business of trading it's plan-based, but it's not rigid. You have to learn flexibility and to define change. So this is the RTH open. This little yellow line is measuring the volume as it comes in. I don't use indicators. I figured out I can do better if I understand the language. And order flow is where, as they say, the financial rubber meets the road. This yellow line now is the high volume. So this is retail. I leave it. What does that say? Let's talk language. Tom, what does that mean? Well, maybe. I always say maybe because that's the best you got in this business. So it's not that it is. It might be too high. Now I get more volume here. So the line's going to move down. Okay? It's measuring volume. Now here's another piece. I get a sell sweep here. Often, when I see a sell sweep, I get a counter rotation. So that's the next piece. So open, sell sweep, maybe we're going there, right? Maybe. Best you have, write that down. Is maybe. Maybe it'll do this, maybe it'll do that, or whatever. New retail price. So two things here. Maybe too high, maybe counter rotation. Where's my counter rotation? I don't get it. Maybe too high, too high. Break low. What's this say? Maybe too high. So right here, I'm now looking for a short. Now I got to find a place to get short. Too high. My short, what was it, 832? I posted this in the lab. I think it was 832, right here. So this is my first short. Okay. So I sold it here, actually in here. It was 85, 75 or something. So I got short like this. Now, why would I get short here? Great question. Let me show you. So now I'm putting multiple pieces together. I'm just going to isolate this trade for you. And remember, I'm clueless. Now there's more here. So this is too high. This shifts down. And now I have this. This is now support. It is too low. Variable high volume node. So now I have what I perceive to be a definition of behavior. And I'm thinking, well, the market is long from the ETH. I have a high probability of getting here. And I'm inside of yesterday's value area. This is an important piece for me. I open, I get my sellers, I get no counter rotation here to my first area of resistance. I get additional selling. I have this, my teeth start to chatter, and I get VPOC migration. Here's my choices. I can sell this, or I can sell this. Now, this is very fast. This is like 1 minute. So I can't even, by the time it registers on my brain, I'm already seeing this. So I know here that this is resistance and this is resistance. So I got this and this. So this, no trade for me. I just can't even process it. And this is not where I want to sell because my risk is up to here. So this is larger, 5 points, and it's outside my risk parameter. So it's not a trade I can take. If it just kept going down, I'd have to wait for a rotation, that fits my plan, or I don't have a trade. I have all day. So anyway, 85.75 was the short. Now, watch. Notice the support. Break low. So this is our variable high volume node. So right here, my teeth are chattering because I'm in balance, and I'm just as concerned as you would be because I'm clueless. But what have I accomplished here? What I've accomplished is this is where it was too low. Watch the behavior. Support. So what do we have? Resistance, support, and now this. I shift up. Now this is balance. So we can do that. It can do that. It can do whatever. So this was right here, my first scale here. So it's very important where I enter to get some risk off. Now this I can do, I can do either and take a stop like I do, just like you do. What's the difference? It's part of the thrill. Where's my resistance? You notice? Too high. Notice the behavior. High, too high. VWAP. I saw this. I was thinking of an ad. I didn't do it. Thinking of it, didn't do it. And the reason was my range. I'm very confident in my plan, not in what this one trade will do. That I'm as clueless as everybody else. Support, resistance, break, resistance, break. What's that? Resistance. What's this? Resistance, target, VPOC migration. Is it too high or too low? Great question. Who knows? Does anybody know? Nope. Just keep following the yellow brick road. You guys have heard of that, right? Now, when I was seeing this liquidity, it was disturbing to me. And I mean that. I look at this and I'm going, come on, what are you doing over here? So this was all stacked up under here. So when I saw this, this is limit order book. I see 121 sell stops. Thanks for playing. You get a coupon to the buffet, and I get my buyers. There's more structure in here. I'm not going to spend time with it. You can watch other streams. You'll see when I really drill down into the microstructure. Variable high volume node, mid VWAP, new retail price. I'm not paying that. I'm out of here. Where are we trying to go? Great question. So I thought that was a pretty good trade myself. Sometimes it's like, oh, look at that. It is random. So it's not about I know nothing. Absolutely nothing. I can prove it because I can't know. So, and this right here, remember the ETH high or low, 97% probability. Well, if we didn't go up first, I guess we might go down. 97% probability. You got to vet this for yourself. So this is the next target, and then 64, whatever that was down below, which is this. So this is another target. Now, this is where change starts coming in. I want to show this to you. We come down, So this, and then I'm going for this too. It's on the price map. I don't know. I come back, I check this. Now let's look what's going on here. Delta. Sellers, sellers. Here's some buyers, but they are weaker. Sellers. A little more buying, not much. A little less buying, even though I get a higher price. Delta divergence. More sellers, more sellers. Ah, the sellers. Come on, guys. Sellers. Now here, I see my buyers. Okay. Now I see sellers. And I see the market go down, but and they're going down, but I'm seeing buying now. So, and here's my sellers. All right, let's go. Watch. New low. And let's look at this. Sellers, nothing going on the buy side. Sellers, sellers, sellers. Now, watch. Now, I personally, and this isn't a recommendation, I look at this. These are too laggy for me, CVD. I mean, you can use them. It doesn't matter. I mean, what is it telling me that I don't know? It's telling me I got sellers. And I can see that right here in the price. Where's the price? Down. Now, when the market changes, what is this going to be telling me? It's going down. Well, and again, it's not that you can't use this. It's how it fits in your plan and your time frame. For me, this is what's timely. Here's more selling. Going to zero, Lewis. Sellers, sellers, sellers. Oh, terrible. You notice change? So what happened here? Let's come back. I have sellers. Now I see buyers taking over. Have you seen any more buying like this anywhere? No. Now here it's kind of like, lower price, delta. So I'm seeing the delta again. Now here, where's my sellers? Now I get some selling here, and look at the buying coming in now, and notice the change in behavior. This right here is, as they say, trouble in River City. This is resistance. That's resistance, and that's definitely it's over now. So right here, when we cross above this and we don't bounce off it, this is big trouble for the shorts. So that was the end of it for me. Up here, actually. And I think I would have done better because I already kind of got the inkling, that things were changing. And then this, as soon as you see this, it's like time to get out. So I got out of this when I saw this buying, rabid buying. That was the end of it for me. I did take a couple stops on it. So when I came up here, this is one. I looked at this. I said, I got my mid, my VWAP. There's the stops coming out, and I have a sweep. So the idea of this trade right here was to come here, and then if I can get under there, maybe rotate down here. It was strictly a reversion trade. So, and I posted this. I said, this is a purse snatch. Is everybody with me so far? How we doing? I'm getting a question out of YouTube. How do I use the heat map in long-term trading? For me, I use order flow for trade initiation, and I can also go back as far as the heat map goes. I'm really looking. I want to see what the icebergs did and what the behavior was, but they change locations, So The idea of this is to help you with your entries and your trade management depending on time frame. Since I trade intraday, everything starts out as a day trade. You know, I mean, I was always a position trader before day trading was really possible. For me, short term was swing trading the big S&Ps. So, and other than that, it was just trend. Put a position on and put your feet up and hope for the best. Manage the trade. So, if you're a swing trader or an option trader, all you do, in my opinion, or even trading ETFs or stocks, which you can do with this process, you're just pulling the lens out, but you're using a similar process. When I put a trade on, I'm always going to be using this. And then if I'm trading a higher time frame, and all I do here is integrate time frames. So I'm still trading inside the higher time frame, which is up. So if I'm only taking longs, I'd be looking. If I see the shorts, if I'm not a day trader, then I'm just going to look for the exhaustion to get continuation trades long. But since I trade both sides, that was it. Anyway, this is a short to here. So it's really shoehorn trading. And I posted this as a purse snatch. I don't suggest anybody do this. I do it because I can read it. But I also, and my stop was above here. So, and the idea of this trade was just to get some of these stops out. So it's strictly, I call it purse snatching. So it isn't scalping by any means, but it's very tight rotational trading. So this one was really just like really like 77 to 75. So this one, I got one here, and then I was going to go for down here. Strictly just a rotational trade. So this one did not go anywhere, So I got taken out of that one. I don't remember what else. Oh yeah, see, notice how what's happening here. This is too low. So that was the lowest location of the volume point of control. So that's our retail price. Think shopping. Well, if the price down here gets too low and the sellers, in other words, think of this like your can of tuna in the store and it was down here and now we find a price that's too low. Notice how the aggressors are here. They were buying it here. Well, now the price moves up, too low. The price moves up, too low. Get the rotation and the sweep. What got me on this was the sweep and looking for the rotation. So it was a very aggressive trade and not so much. Watch. Now I have liquidity here. I get VPOC migration. Everything is suggesting we're going higher. Notice this. I don't remember this one. I'd have to look back. These are very aggressive trades. This is like what I was doing with this one. Actually, I did take another short here. And now I'm looking back at him. I'm going, what were you doing? Because I can trade this, but I'm really kind of just trading these little rotations. I'm not getting aligned with the longs because I really don't have a long. So all I have is rotational trading. This one I sold again and my stop was up above here. So when I see the resting liquidity, I can lean. This is a trigger. This is a test. This is a test. So the short was like here. Stop was above here. I got missed by one tick. And I was just going, I saw this and I said, oh, you're stopped out. Didn't get stopped out. And then going over here, the HVN. This is just a rotational trade. And then looking for it maybe to come lower. And it got taken. And this was the other piece. I saw this sweep. As soon as I see the sweep and I see this, the trade's already in trouble. And then you get your migration, right? So you've got this, too high, too low, sweep, trouble for any short right there. Resistance, nothing going on here. And then it's just going up from here. So resistance, This is the IB. This has over a 98% probability to take out first hour's high or low. Nothing going on here, just nothing. So now let's look a little further. Previous high or low has a high percent probability. So, and this is not a trade recommendation. So for me, I'm now going to be looking for long. And I have to wait. I have nothing to work with here. I have to wait. So there's a couple possibilities here. Let me give them to you. One is something called the IBF, which is a short from here back down, because this is balance, or let it come down and then look for longs to get the statistic, which is either yesterday's high or low. And I suspect since the higher time frame is up, the long side might be the one to be leaning towards. However, if you take this trade, the IBF, let me explain it to you. It's a mean reversion trade. This is where is it? Where you'd be going. This is the target on if you took a short here. It's counter trend and it is a reversion trade. So let's see how this one works. I don't call trades. So I have two scenarios here. I have a short here. The idea is to come across the range. Maybe get back to mid VWAP. That's called the IBF. It's in the 60 PDFs. See, think about this. The higher time frame is up. We have a stat that says, and again, it's only a stat. Doesn't mean it'll do anything. There's an 82% probability we'll take out the previous high or low. Well, we didn't get the low, and the higher time frame is up. So if you take this short as a day trader, you are counter trend in the higher time frame. And you might, and this is where a trade's just a trade. So it might only come outside somewhere, and then come back and take out the high, this high. Or you're taking as a day trader the short. Let me show it to you. 9:30, let's come back to this, is where the first hour's high or low comes. When it comes outside, which is here, don't forget the open was the high of the day, and we break above it, there's two possibilities. You keep going, or since we're in balance and you get the IBF, you can sell this, and it's called mean reversion. If you got long up here, which some traders might, you would take a stop. And then you have to determine if you're on the wrong side of it, you get short here. And now this is kind of what you're going to see. This is a distribution of volume. The high volume is there. This is like a volume point of control in a microstructure. Let me show it to you. Now I'm getting down in time frames, and this will confuse you. None of these have to be trades that anybody should take. They shouldn't be trades anybody takes unless you understand the condition of the market and the changes and what it might do. We are not in the business of predicting what the market will do. Sorry. Wish it was, because then we'd all be able to predict and we all could be right. It isn't a right or wrong business. It is a business of maybe it'll do this, maybe it'll do that, maybe it won't do any of the above. So what is this? Sellers are here. See the absorption? The buyers are here. The buyers are here. The outside edge is there. The IB is there. The high volume, this is like your retail price. Think of this like a store. So the store, the supermarket, is all the volume. As you isolate these distributions of volume down, there are also stores inside of stores. So think about this like your convenience store down the street. And if this price here, which is your retail price or high volume in the store, becomes too high and we break away from it, too high. Now, and the IBF, alignment. This is a structured trade. Then where's support? It's going to be here, because in this one, Too high, too low, too high, too low, retail, high volume. So the possibility is if that's too high, we're going to come back and check the last area that was too low, which is this one. If this is not too low, we can come here and we can just keep going down, and it doesn't mean we will. This is the current retail price for the whole day. Now, this is probably going to be confusing, but all I'm doing is trading multiple time frames. So as you guys think of time frame, I think of it not as time, but as behavior or auction. So I don't use the clock to regulate the time. The time is a function of the participant behavior. So it's a difference. You guys go, well, 5 minutes, whatever it is you do, right? I don't. I found that the clock is not relevant here. Behavior is what's relevant. So the auction, oh, it's on sale. See where the buyers were? Yeah, but I'm not paying that. Why didn't it go up here? See the sellers? Sellers. We come back up. Where's my buyers above here? Well, the reason the green delta didn't go up is because the buyers were by stops in the icebergs or the passive side, taking the other side of the stops. Here's another little trick. It is a trick. Here, and now remember, I don't have a trade here until I get below the IB, and it is counter trend. So, so if you take a short, you always have to get risk neutral, and resistance is going to be there and there. Let's see what it does. And remember what the statistics are. This is what you always need to be keeping in mind. What was yesterday's high? Friday's high? This. High probability to get here. So you could only be taking longs if that's your inclination, or you trade counter trend. That's also possible. And then you'd be looking to come down out here and then lower. Not a recommendation. So we'll see what it does. That's it, guys. I mean, that's trading. What happens, happens. So what you have is higher time frame is an uptrend. We already found too low for our sellers from this morning. We have squeezed them out, gotten the buy stops out above the first hour's high and the opening swing high. And we need to find buyers above here to continue on our merry way. High probability of taking out yesterday's high or low, Friday's high or low. And after that, no idea. So let's also look at another concept. Market goes down, go up. The market goes up to go potentially down. It's called rotational trading. Where's our resistance? Not a recommendation. We can see the structures if we understand the language of the market. So again, I don't use indicators. I read the language. And what I'm doing is I'm attempting, and that's all I can do, is to define where the behavior takes place and what it might mean. And then if I know that this might be too high, because this is where the volume is, think shopping. I'm not paying that. Yeah, but it's on sale. And the majority of the volume is taking place right there. That's why it's called a high volume node. And if that's too high and I break away from it, then I can come back and check this outside edge and I can check there. And if I get through here, I mean, this is the outside edge and I can always get squeezed out. And these are not recommendations. I'm just helping you see structure. Then if this rolls down, this would be the target. And it has to get through the VWAP in the mid. We might find buyers here if we get here. So if you're on a short here, which may or may not be appropriate for you, depending how you define the condition of the market, you're either not doing anything here or you're using counter rotations for long continuation trades towards the statistic of yesterday's high. Or you're on the short and it's counter trend and you understand that. And the target is this, this, this. That's it. That's where we are. You guys have questions? So let's watch this. You guys have questions? Throw them in the hopper. How we doing in the Trader Lab? You guys doing all right? Thanks for being part of Trader Lab. If you're visiting in YouTube, Trader Lab is available to all of you. There's no cost. It is a community of like-minded traders who've come together to leverage their collective experience. This is about the business of trading. It's not about, there's no holy grail. So save your time. That's all I can tell you, in my opinion. But 46 years of this, I think I'm entitled to at least some ideas. And anything you've done, we've all done. So everybody kind of goes down a path in this business. And we all start out trying to get the business to fulfill our needs, with this fantasy that somehow we're going to have a printing press or an ATM in the basement. It's not the way it works, especially as you're developing. So that fantasy is going to change into frustration. And then it's kind of like the wandering in the desert indefinitely, grabbing ideas, looking for certainty, and then buying other ideas from, quote, other traders. I was mentioning in Trader Lab that, I've been doing this since 1980. And along the way, I've got to work with and meet a lot of different traders. Some of them are rather famous. They've been written up in Market Wizards. Others are just like you and me, regular folk. And then there's the books. And I hadn't really thought about it, just things I don't think about anymore. But there's a guy who wrote a book, and he's a bestseller on Amazon. And to give you an idea, he comes across like an expert. And there's all those, where they give you the reviews, best book I ever read, this, that, and the other thing. Well, I know the guy personally. He could. They used to call me from the floor to find out what he was doing so they could fade him. What does that tell you? Anybody can, and then little screenshots of things that work. Everybody has something that works because everything works randomly. But, and when he wrote this book, and I'm trying to remember when it was, maybe 2000 or something, I don't remember. But, and we were on the same, we traded in the same, let's just say the same place, in the late 80s, maybe 90s, I don't remember. But it was brutal for him because that's how bad he was. And I'm not saying that to disparage him. I'm just saying is caution, because the quote expert is not necessarily anything more than a marketer. Now, and what about me? What am I? I'm just another guy. I don't say I'm an expert, but I am someone who understands what the business is, and I also understand how to do the business, how to sustain in the business, and how to generate a sustainable business model. Let's just put it that way. And then it's a matter of finding your groove and only interacting when you have a statistical edge. And most of us want to trade so bad to fulfill that dopamine and ego gratification and validate our self-worth. Yes, you do. That we throw the business model out the window and just click, 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 click. That's what most of you are doing. And you do it for all kinds of reasons that are psychological, not in the sense of saying, I'm going to build a business and I got to roll my sleeves up and I'm not ready to do open heart surgery just because I read a book, right? Same thing. Anyway, I hope that makes a little bit of sense. So what is the condition of the market? This is our resistance. The condition of the market is longs primarily. We found too low. Statistical probability suggests we're going to take out today's high of the day, not a recommendation. This is a short-term short called the IBF, and it looks like it's not going to hold in. So this trade, if you took the IBF, if I took it, I would take a stop. I mean, it has to clear this, but this is really where the teeth would chatter. So I'm just letting you know. And how do I feel about stops? So you underline the word feel. Not good. But what do I know? There's a difference between how I feel and what I know. What I know is that if I have an edge, I have a random distribution of outcomes. I can never know what's going to happen. I have to accept it. So if I get short at the IB, which is this thing, and the trade fails up here, I know this high volume is pretty much the outside edge for this trade. If I start pushing through here, then the trade goes to the happy hunting ground. And that's fine. So let's see what it does. None of these are trade recommendations. The idea of the Trader Lab is to help you guys understand market mechanics. How does the market work? Why does it do what it does? Why did the market go down early? And now why is it squeezing? Because once the market needs to go up to go down, and goes down to go up, goes down to go up. The market goes up to go down. Now we don't know where to, and then down to go up. If I find my buyers, it looks like we ran out of sellers here. Look at this behavior. Then the possibility is, if I can't get below this structure right here, then I'm going to squeeze. That's all there is to this. And then that trade would be done. So this trade could be a short from here, and the stop could be just, right out here or up there. So this is really where it has to hold if it's going to go down, right here. So we'll observe it. Hope you guys are doing okay. So why is this material? Because this is where the volume was. In volume, either who's in here? Well, we got our sellers here, and we found sellers here. That creates that. Now, if I come back to where the sellers took control, which is there and there, then if I come back to it, those same sellers may show up again. That's the idea. And if the buyers are now consuming the sellers, which it appears it might be, then those sellers are going to get pushed out and we're going to continue higher. That's what I know. And this is time frame related. So if you're trading a shorter time frame, you might be trading, something like this. And out here is where your stop would be. If you're trading a higher time frame, you'd just be sitting through these counter rotations. That's what makes it individual. So this trade's going to fail. So we're still continuing with the higher time frame trend is up. And this is on the hip rate. So not a recommendation, just as what it is. I'm getting a question, why not the IB continuation trade? Pick one. Remember, long is the primary idea. This is counter trend. If you're going to take a counter trend trade, you have to be conscious of what it is. Resting liquidity, ETH high. So Ben, the correct answer is this is a counter trend trade, which I said, right? So you can take a counter trend trade, but you have to know you're taking a counter trend trade, which means the dominant side is the buyers. And all you're trying to do with the counter trend trade is to get the stops out. Because the market is long, and then we might get the rotation. And this looks like it might be all it's got in the tank. So then that's that. When I take a counter trend trade, I'm pretty nimble about the whole thing. I don't just sit here because I'm conscious that it's counter trend. So I always think of those a little bit more like subway purse snatching. I don't know if you've ever ridden the subway, but you see all kinds of stuff. I grew up in New York, so not only do we have the purse snatchers, we had some other things that would happen on the subway that were interesting. So this is where the sellers were, right? There's your absorption again. This is your outside edge. Yeah, this is just funky. So Ben, here's your choice. You see this? You don't take the short because the trend is up, or you take the short and the trade fails up here, or you just don't hang on to this thing. It's all up to you. But this is difficult because here's the IB. The idea of this is that it doesn't come back out here. But it doesn't absolutely fail until here. So it's just a trade. So I hope I answered your question, Ben. You can take either trade. But where do you take the IBC? Would you be taking it there? Would you be taking it there? And then where's your stop? You see? So so for me, I don't have a way to get long here. I might be thinking about it now, but this was a short counter trend. So, and the other part of this, guys, is that you don't need to be taking a trade. There's no reason to trade if you don't have an edge. I take counter trend trades. I take stops like everybody. It's not the big deal. It's annoying, of course. Nobody, quote, wants to take a stop. I'm sure the casinos would feel better about everything if they didn't pay the gamblers. And then the other part is, do I have an edge to take a counter trend trade in this condition? Actually, I do, but I also know it's counter trend. So my idea of it is I'm only trying to catch the sell stops from the traders that are trailing in here. That's all I'm trying to do with this, is to rotate. And then the VWAP in the mid. So this trade, if it worked, I'd be looking down in here. And that has a decent risk reward ratio for me to come here. And it could come all the way back to the fair price, which is there. So I have a potential short. I don't have a long because I don't have a location. So if I don't have a long, then I can think about it in the sense that I have these guys and I have all the stops. Now, I don't know if we're done, with the counter rotation. So that part I don't. But I would take one shot at this. I would not press on it because it is counter trend. My thing with counter trend is I'm not aggressive with them. I just look at them as opportunities. Let me just show you what I'm talking about from a different point of view. Market goes up to go down, goes down to go up, goes up to go down, goes down to go up, goes. What did it do here? Opens here, goes down to go up, goes up to go down, opens higher, which I think was up here, and goes down to go up, goes up to go down. This is the nature of how this thing works. It rotates. And if we're day traders, we are trading rotation. And then you pull the lens out. And I always think of this like a vertical integration of time frames. I can be short, you can be long, and everybody can be doing their thing. It is very much not right, wrong. It's edge. I have an edge trading short here. I also emotionally am uncomfortable with it. Okay. So, in the entry on this thing is right, over there, which is there. So you have to put this thing on and then you got to decide what are you going to do about it. The trade fails out here or out there. And that's really trade plan specific. Remember what this is trying to do. I'm not saying it's a good trade. I wouldn't know a good one from a, quote, bad one. What's a good trade? Plan-based, vetted, and an edge. So this is kind of where this thing is going. Maybe if it gets under here. And let's look at the rationale here. Sellers are there. Oh, here's what I wanted to show you. I wanted to show you a little something. Fun facts to know and tell, right? See if I can show this to you. Not really here. 87 cell stops coming out, only one. That's a divergence. I can now rotate. Microstructure. For this trade to work, it's got to get under here. Because why? What happened here? My sellers are there. There's the delta. I go lower. See the selling? Less sell delta. That's divergence. You guys know, right? Delta divergence. Lower price, less divergence. Buyer, 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 buyer. Some selling, selling, bought more buyers. Selling, 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 selling. Buyer, 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 buyer. Sellers, what's going on? Buyers, more higher than the sellers. Higher, higher. Now the sellers take over again. Sellers, now what? Seller, 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 less selling. I need now to see what's going to happen right here. What happens with these buyers and then what happens afterwards? Let's move our little structure over. And now I'm going to show you. This is why I call it structured trading, because you can look at the structure. Structure is based on the participant behavior. And what do we know? In the little store down the street, we're not going to pay that. I'm not paying that. Sellers were here. Yeah, but it's on sale. Here. It's on sale there. Too high, too high. Now I'm on my outside edge again, which is this. I've isolated this. Too low, too high. Retail. If I can get under here, I can come down to the next one, maybe, which is there. Kind of, this goes psychologically from euphoria to depression to euphoria to probably depression. I should have got out. I should have got short, right? Anybody? How's that working for you? Yeah, Mark, I have no idea what you're asking me. If you're day trading and you don't have an edge, then you shouldn't trade. I mean, then you're just gambling. So I always say if you're going to gamble, this is not the business. Go to casinos and suck up that environment. Get the cocktails and the ticket to the buffet. I hear that the buffet is not as good as it used to be. Actually, I was in a Bali's casino a couple of weeks ago, and I think it was only a breakfast and lunch buffet. It was like $30 or something, you know, which I didn't go to the buffet, needless to say. And also, while I was at the Bally's, I don't gamble. I mean, why would I sit at a table and gamble where I don't have an edge? That's just a recipe for, you know, unless it's entertainment. Then I walk in there, I put down whatever dollars, and it's like I've gone to entertain myself. I think a show would be better entertainment if they got something decent. Anyway, anyone who's just gambling, you're just passing through. Trader Labs for traders who want to build a business and understand why most retail traders fail, because they have no idea. They're just playing, they're gambling. This is not the fantasy of trading and the reality are very different. And we have nothing that we can really lean on that replicates this experience. There's nothing in our lives, as far as I'm aware, that is like this. So the only thing we have is what our experience is outside of trading. We bring it here, and then we think we just do what we do outside, and somehow we're going to have the same outcome. It's not the way it is. You might as well be on Mars. So the oxygen, if there is no oxygen on Mars, so let's just say the gravity's different, the environment's different, the quote rules are different, and you have to operate in a different way in this environment. So if anybody is not operating with a plan, then just accept your gambling and enjoy yourself because you're playing a game. And personally, I don't think that's a problem as long as you acknowledge it and you are okay with the outcome. And that's a choice. The thing I've found is we choose what we do. We have control. Now, the thing we don't control is our emotions. We have no control over our emotional state, and our emotions is what drives us to do behaviors that are not in our best interest. So that's another element in this. The only way I've found to manage these emotional states is to trade with an edge and to just follow a plan. And like all of us, we take stops. Trades work, they don't work. We get scaled, we scratch, we just take full stops. And some days it's just not going to be good no matter what you do. How do you measure yourself in this business? If you're looking at P&L, that's not the measure. The P&L is the outcome of a vetted plan. P&L takes care of itself if you take care of the business. No different than a shop owner. You open your store and you're going to have good days and bad days. And the thing is, if you have a process, you have a product that gives you a net, even though you're going to have buyers who give you bad checks or whatever happens, it's still in there. But over time, you still get a net. This is the same kind of business. Some days it's great, other days the outcome is not going to be so good. But if you're following your plan, you just go, well, how do I measure myself? Does my plan have an edge? Well, that's the first thing. Did I execute my plan? If I have a loss for the day, did I execute my plan? If I did, then give yourself a pat on the back, because that's the path to successful tomorrows. If you don't have a plan and you have a winning day, that's not a plan. That's just gambling. You're going to have more losing days than winning days. That's just the way it works. So even though the gamblers do win, So if you want to know what the business is, you're in a gambling business. The difference is you can be the house, which means only play games with an edge, or you can sit with the gamblers. I always say get the cocktails. You're going to probably want them. So, and that's a choice. You're empowered in this business. You have a choice. I get below here. Get rid of some of this debris. This is debris. You can go. So what do we know? Too high, retail. Sellers are here again. So let's look. Sellers are there. Sellers are there. Buyers are here. So you can see the battle. So the buyers are out here. Sellers are up here. And then it's whatever. And we just have to wait. So if you were taking this trade, which is this, you have to try to get risk neutral. If you don't get risk neutral, you're going to take a stop. That's all there is. Again, it's counter trend. So I can't tell you what's right for you. I just don't mind telling you what I do. And this is not a trade recommendation. I trade whatever. I just do whatever. And whatever happens at the end of the day happens. The trade off the open, is the same thing as taking one of these trades. It's just one. That one could take a stop as well as this one. Doesn't matter. Hope that makes some sense. If you're getting some out of this, guys, please leave a like if you're getting something out of this. This is the Trader Lab. It's about the business of trading. It's not about any one trade or anything. It's just process and market mechanics. How does the market work? Why does it do what it does? And subject to time frame, you could be hanging out in this thing long. You could be doing anything. For me, I'm a day trader at this point. I don't hold any positions in the futures market. I do position in other instruments, but not here. I like to sleep at night. So I just do my thing, and whatever happens, happens, and then go from there. So this trade is not doing well from a short. I mean, I see the selling, and I have my structure in my trade, but it's not going down. So the higher time frame is up. We already have our shorts. The only reason for this trade is that we squeezed the buy stops, and then we have our potential for the counter rotation. And if I don't get below here, I'm not going anywhere. Just going to continue going up. And I do have a high probability of getting over the all-time high today. And it doesn't have to. We can be inside today. And part of the, and I can't tell you, I mean, it's not my job. I don't know, anything. What I know is on Thursday last week, we had a buying tail. And then Friday, where we were anticipating what's called responsive selling, sellers taking profits because of the long weekend. We have a tail and something called balance. So it's two-sided. We did build what's called higher value, which means 70% of the volume is in this yellow box, and then 70% of this day's volume is down here. So higher value. So everything is leaning up. That doesn't mean as day traders that we don't just do whatever. So we came down and we just missed this. So we tested back here. If this is too low, then we can continue. So we have high volume at 94.75, and then we have this high. Let's come back and look at our 94.75. It's there. So ETH high. So the ETH high at the 94.75 set up the shorts in the morning. That was part of it. And now we're still pushing up. So it still looks like, we have a good shot at just. So if this trade right here, if this thing doesn't, takes a stop, it takes a stop. I don't think too much more about it other than rooting for the team. You go, come on. I talk to the market. It doesn't seem to listen. So what do I know? I got my sellers. I know this is my retail price. I got my sellers. I got my buyers. This is all I know. And I got buyers. So this is absorption. And I got my buyers over here. What do I got here? My sellers are up here. So they're still over there. There's the icebergs. There's the buy stops. So it's going to do something out of here. That's all I can tell you. I couldn't tell you what, because I can't predict anything. So I know that this is really the outside of this thing. There and there. So it can still come under here, and this is where we're trying to go. If it blows through here, then that's the end of it. That's it. So now what do you do with this thing? You just sit and you let the trade marinate, and it's either going to take you out. Remember, counter trend, or in this, or it's targeting, or squeeze the area, off you go. Thanks for playing. I get a coupon to the buffet, and then we're looking at this. So it's one or the other, right? Or both. It could be either. Doesn't matter. That's it. That's all there is. How many trades do you need to take a day? I find this is not about frequency of trading. It's about edge. So if you have a couple of trades a day that have edge and the rest is just noise, then that's your job. There's going to be days where there's a lot of volatility and rotations where there'll be a lot of trades. I've done streams that are like 4 hours long, and there's 20, 30 trades in those things. And you can find them out there in YouTube world. And then there's other days where there's 3, 4, 5 trades. And that's, you know, and the reason there's 3, 4, 5 trades, whatever it is, it's what the market offers that's vetted. So, and what I have found, at least I'm only talking about me, is I take stops. You're not shocked, I hope. And my risk runs around 3 points or so per contract. So when I get on a trade like the short from the morning and I sell 85s and take it down to the ETH low, wherever it was, which I think was around here someplace, somewhere in here, that's it for me. And then 64 was the next one, and that one didn't happen. So, so if you grab those kinds of things, and you're running more than one contract, of course, then you can afford to still probe the market, take stops or scale and take a stop, and then just sit and let the trade do what it's going to do. Emotionally, I go from euphoria to concern. I do because that's what I see. And when you see danger, whether it's a stop or an apex predator, you want to run from it, which means you want to bail out, right? So you got to learn about yourself. And it's not willpower. I used to think years ago that this was a matter of, it's willpower, I'm going to be tough. And no, it wasn't it. Because you can't be tough when you think there's an apex predator after you. That you're overwhelmed by chemicals that are released in your brain. I didn't understand it was chemicals. I thought it was just willpower, not willpower. I can assure you, if a bus is coming at you and you step in front of it, you're not going to have willpower and stand there and wait for the bus to run you over. You're going to have a reflex that is unconscious, and hopefully you jump out of from in front of the bus, because that's your primal wiring. We have the same reaction to this. So that's where statistics become a tangible ally in this. So so I know on this trade, this IBF trade, even though it looks like it's not going to sustain itself, that it has a positive expectancy for me. Now, and the outcome of any one of these is random. So either or, whatever. That's what I know. And I also know that my buyers were here and that the buyers are there and that the buyers came back in here. The buyers are consuming the sellers. So that's not good for the short. So, but has it failed? No. It looks like it's going to. Stops are going to be out here. You got this liquidity sitting in here. So we have to see. This is just probably algorithmic behavior, and it might pull. It doesn't matter what it does, because I don't trade based on this. I trade on structure. What happened here? My sellers are here. Now this is back in. So are they just there as bait? Oh, I got this here, and retail traders are going to sell in front of it. Well, for me, I don't sell this. My stop is out here. So, and it's not right there. It's a couple ticks out. Part of the reason for that, and just give you a little idea, is buy stops are sitting here. Retail trader behavior. They're all piled up over here. So what can happen is my stop usually is about 3 ticks, not a recommendation. You have to vet this. The idea is if I come out here and pick stops that the selling icebergs thought this was a great place to be selling, might sell again because they're motivated. So if I get inventory coming out, buy stops as liquidity, then these guys may sell again up here. So until it fails, as the old saying is, it hasn't, in spite of how I feel. So mentally, I've already taken the stop if I'm short here. And I don't have a trade on here because I don't initiate trades on a stream. But this is a trade I would put on and take a stop or whatever it does, it does. If I get the rotation, I'd actually be looking for the rotation to turn around and get long. So it'd be short to long. So, but it may not do that. So it may just continue higher. That's pretty much it. By the way, guys, if you're interested in the Trader Lab, feel free to access it. There's a link in the bottom of YouTube. There's no cost for it. This is about the business of trading. There's no holy grail. I can't dazzle you with my soft shoe tap dance. All I can do is share with you the business, and I can share with you trades. And some work, some don't. The idea of this is that if you can build out a plan and anticipate behavior, at least for me, I'm only talking about me now. I tend to trade larger rotations because I need to cover the cost of my stops. I look at stops not as a right-wrong thing, but as a probe of the market based on what I perceive, based on what I've defined as the condition. Now, the condition is up. So when I take a counter trend trade, I understand counter trend. If I take it, I know that any trade, I can take a stop. In this condition, I'm more aware or conscious of counter trend, and I like to get a quick reward for it. I'm not getting it here. The longer I sit in this position, if I was in it actually, the more disconcerting it would become, because the buyers are here, right there. So I got my buyers, so I'm not getting rewarded here. So I do anticipate getting taken out if I was in this trade. But the anticipation doesn't mean that I predict it. I anticipate getting taken out anytime I put a trade on. It's more psychological. It's like I put the trade on, I've already paid the stop, even if it's not realized yet, because I don't know the outcome. So when I put the trade on, I've already taken the stop. And then it's sort of like, I wonder what's going to happen. Anyway, I hope you find that useful. By the way, if you think your trading buddies might find this useful, forward this over to them. If you're interested in Trader Lab, use the link in the bottom of YouTube. If you're inclined, there's no cost for Trader Lab. You don't have to be a Bookmap subscriber. You won't be solicited, but you will be in a community of like-minded traders, and it doesn't matter how long you've been trading or even how you do it. If your Magic 8 Ball works better than mine did when I was on the trading desk, bring it. Show me how to use the Magic 8 Ball. You guys ever tried Magic 8 Ball? We tried everything, I'll tell you. And Magic 8 Ball was, the only problem with the Magic 8 Ball is somebody might grab it and throw it, So that's just the nature of these things. Please give that like and subscribe to the channel if you want to get notifications. By the way, there's other educators in the Trader Lab, and I should say in the Bookmap Discord community. Not only the Trader Lab, but you can get information and streamers on stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap, options, swing trading, market maker behavior, algorithmic behavior, and a lot more. Please give a like again on the way out. Appreciate it. Support the channel. There is no cost for it, so it encourages me to keep doing this. And I look forward to seeing you guys soon. And if you're interested, come over to Trader Lab. I look forward to meeting you there. Say hi. Thanks, everybody. Appreciate you visiting the lab today. Hope you got something out of it. Higher time frame trend is up. Market can always do anything. And we do have a high probability of taking out either yesterday's high or low, and past performance is never indicative of future results. It runs about 82% probability. Take care, guys. Look forward to seeing you.